Hello and welcome. We are having this very special chat for you today with someone you would not have seen on business television in the recent times, who've been away building an organization which is from the broking industry at a time when things are getting extremely competitive. Mr. Dinesh Thakkar of Angel Broking was busy last 10 years building an organization with a digital backbone, a business which could last generations and which could last business cycles and the competitive intensity of the broking industry. And now he has decided to chat with us. It's a very interesting occasion. The company is at the cusp of going public. So we thought of having this wonderful chat with Mr. Dinesh Thakkar on our show today. Mr. Thakkar, thank you very much for your time.
Thank you, Ajay,
we're chatting after a very long time.
Yeah.
So let's start by understanding your thoughts on where the market is right now. We are in the shadows of, we've just come out of one of the worst phase of the market. People, at least this generation, have seen. People were, so badly shaken in March, and now we are almost knocking at life highs once again, thanks to global liquidity. You have seen cycles in the last 30 years of operating in the market. What's your analysis of the investing environment?
See, right now, I think investors are looking at FY22 and beyond. What happened, like currently, COVID and all that, it is like unprecedented thing. Thinking too much on this would not help you to take a right decision when it comes to investment. I think people are looking at things beyond FY22 now, because it's very difficult to predict what will happen in this few quarters. But if you look at total structure of the economy, I think that is intact. Capacities are intact. Jobs, I think, will bounce back once the economy opens up. So I think overall investments, I think investors are looking at, I'm talking about broadly about HNIs and institutional investors. They are looking at liquidity is good. And when things would be better than this, what we are seeing right now, market will bounce back. It is better they start building kind of a portfolio at this level so that they can get a benefit when economy returns back to normal.
What's your view on this point which is being discussed in the market very often these days, that the situation on ground is so bad, visibility is very low, but the market is running away and the fundamentals and the market are completely divorced right now. How much would you, how would you analyze that point?
See, whatever we are able to see and predict and envisage, it is there in price. So it is futile to be looking at current data and trying to predict the market trend. Market always looks future. Future looks to be good. Future does not look to be there is some kind of catastrophe or some kind of big crisis which has happened. It is COVID. Because of that, many industries are unable to function normally the way they should. But if you look at one benefit that global and Indian economy has got, that interest rates are going lower. So market valuation is function of interest rate. So definitely right now higher P are justified. And looking at future that growth will bounce back. I think market, right now appears to be in the right mood in terms of now one has to get a hang of how he has to build a portfolio. I would suggest that, entering the market at any level or predicting market at any level is always difficult. So it is better you take a calculated call that for 2-3 quarters, one can invest and build a good portfolio and get an average price of this 2 quarters.
Sure, fair point. And rates are actually coming down quite fast, not only in India, but globally. There is also a phenomena which is happening in the last 1 month. We've seen broadening of the market. Mid-caps, small caps, end of the market has started to become active. This is that section of the market which peaked out in 2018, January, and ever since had heard retail HNI portfolios quite bad. Do you see from here on a broadening of the market? How are you analyzing the valuation of the broader market, Dinesh?
The broader market, I would say, was impacted because of this asset liability mismatch. And that impacted lots of housing finance, NBFC, and eventually mid-cap and small cap were the one who took a major hit. But if you look at their valuation and all that, I think they are fairly and attractive valued. And right now that steps that SEBI has taken to increase liquidity in the small and mid cap. I think that is helping to get in liquidity in the sector back. So the sector, there are lots of companies who are really performing well. But currently, because of lack of liquidity and interest, they were not performing. An issue of, I would say, ALM is behind us. So I think we have crossed that kind of like bad patch. And now we will see market will give a proper right valuation to a good company in that sector.
So are you seeing a case build up that if one were to have a 2 to 5 year or 3 to 5 year horizon, taking assumption that the vaccine, several companies are in final stages of finding one, in next 12 to 18 months, worst case scenario, we may actually find a vaccine. In the meantime, rest of the world will gradually start operating with COVID, and they would find out ways. Digitization is a big push with COVID. So if one were to take a 3 to 5 year horizon with low rates and abundant liquidity and some slow recovery coming in place, there is a case build up for 3 to 5 year good traction for markets. Is that a good hypothesis? What is your thought on the longer term?
Yeah, I believe the vaccine is going to eventually come. That is what I am saying, that economies are going to be normal bounce back. But there are lots of learning that we have learned in this COVID period, like working from home and working with anyone globally. That has helped India a lot. Here I would give a credit to this current government because the kind of a digital program they have run, that has helped us to function even in this condition where offices are locked. But productivity of sector which are doing well, they were able to cope up, they were able to deliver. So what I am seeing is that when economy will turn to normal with this new culture or new learning, I think our productivity would be far more higher than what it was previously. So getting very closer to productivity of developed country, if it was like 20 years away from us, now it would be lesser than that. So what I am seeing is that because of COVID and digitization and the way we have got used to working in this kind of an environment, we are just going to see a better productivity and better growth when things turn normal. I am very, very optimistic.
So do you see that there is a early stages of bull run? Do you see signs around? You have been around for 30 years. You've seen so many boom and bust cycles. Where are we in a market cycle right now?
So I would say this kind of a cycle, no, it is unprecedented. See, previously we used to see some big crisis. And because of crisis, market used to tank. I'm referring to say like subprime crisis. Market used to go down. And there were fears that whether economy will bounce back. Today, fear of economy will bounce back is not there. It is that productivity right now is not as per what it was before COVID. But if you look at few sectors, they really performed well. So in that sense, I feel that market appears to be like factoring in all these things and looking forward to future. So right. My point would be like maybe like this appears to be unprecedented, but if you look at the way global big kind of leaders are pumping in money, I don't think they're going to stop in midway. They're going to see that we are able to cross this path, and when economy turns to normal, then only they will stop the stimulus what they're giving. So overall, I feel that we'll be able to cross this bridge very easily. There can be few volatility or some phases that we are unable to predict, but that is the nature of this what we are situation we are going through. We have to be like get used to this condition and feel that markets are going and economy is going to turn normal, and people will learn how to live with this COVID.
Right. You've also seen the phases of the market. So does it appear like we are in 2012-13? Does it appear we are in 9-10 or 2002-2003? Does it come similar to any of the phase where there was a lot of questioning, there was a lot of skepticism, but the market kept on rising thanks to liquidity? Can you draw parallels? What phase of the market you've seen in the past which comes closest to what's happening right now?
See, what you're referring to, dot-com bubble crisis, that was genuine crisis which hit the economy. Subprime crisis, definitely it was big crisis in financial sector. This is something I think people are ready to work. There are capacities, there is enthusiasm in terms of consuming things, going back to their jobs. but we are restrained because of this very unprecedented phase. So comparing this phase with any other phase which had really where economy was weakened, I would not like to compare this phase with any other phase. Because currently, if you see, few sectors are really doing very well. So it is not that this crisis has impacted all the sectors. So I would say this is something that you have to take it. It's a fresh phase. But I'm very positive about that things are, when things turn normal, we'll see better growth than what we saw pre-COVID. And market will always look at future, will not look at current numbers and how current industry are performing. I think worst is behind us in terms of numbers also. Progressively, we are seeing numbers are getting better in every sector.
Dinesh, you are a businessman yourself. You have a great research team. You work with them closely. What's the feedback you're getting? Which are the sectors which, in your view, look very promising for the next 3 to 5 year period? Would it be from the older economy? Would it be new economy, the way we are seeing institutional money pouring in new economy sectors? Where does your interest level or your research or homework tell you the big money could be made in the next 3 to 5 years? Could be the leaders of this cycle.
I feel IT and company who are helping into digitization would be really our favorites. Because we are seeing post-COVID, lots of companies are going to use lots of technology platform, trying to build more digital platform, which can help increase productivity because already they got used to this culture. Second, I am very bullish on companies like even if you take infrastructure, if you take company into pharma, I think all these sectors. But if you broadly ask me, financial sector also, we are very bullish. We feel that banking is the one where person should be overweight.
That's interesting. Banking has been punished quite badly and you're making a wonderful contra call. You are not as negative as everybody else is on banking.
See, whatever you do, like whenever economy will bounce back, finance is a backbone. And this sector is going to grow better than economy. So whatever we know about, and there are lots of experts who can analyze the impact of this, and already it is factored in valuation. But if you look at sector's growth, it would be far better than a growth of economy. So I feel that overall, whatever punishment we have to give to the sector, already it has been given. Now there is lots of value and growth. And always market will look through the lens of growth. So one cannot deny that this sector would be having better growth than economy. And right now valuation appear to be very, very attractive.
Right. Wonderful. That's a great call. Dinesh, you have also seen so many political regimes in the last 30 years of market. And the way a seasoned market person looks at political regime is different than an ordinary citizen. A market person looks at the reforms the government is taking. They look at what kind of steps the government is taking to take growth of the country higher. How are you analyzing the work done on reform front in our country in the first 6 years, 7 years of this government? Because this government was earlier seen as, the market loved this government, right? How are you analyzing things which have been taken, the work which has been done so far?
See, I would say that this is the government who has acted really fast, swiftly. But India, being the economy way it is, it takes time for us to see some results from this action. So I would say steps that this government has taken, like, for example, Digital India movement was launched in 2015. Today, I think we are seeing a biggest benefit in this COVID. Companies are able to work because of this steps taken by this government to make India digital. Today, we are able to work, we are able to transfer our money. So like we can do lots of things because of this movement or digital reforms that this government took. But did we see result immediately when they opened Jan Dhan account, when they started UPI, when they started Aadhaar-based authentication? Currently, when you're working from home, you feel secure. You have a very kind of like secured network around you. You have 4G, which is working fine. So if you take steps, whatever has been taken, like GST reforms and all that, it takes time to see the result. So we should not jump on conclusion that, okay, results have not come in 1 year. These are reforms which takes time. if you look at lots of developed country, wherever these reforms were introduced, they also took their own time. So overall, I would say happy with this government steps. Could they have done better than this? Always there is a room to better your performance.
Sure. You are also, Angel Broking is a true blue retail brokerage with presence across the country. Even in smaller towns you go, you see sub-brokers of Angel Broking operating. This time we are seeing a surge of retail investors from across the country in smaller towns as well. Tell us, what research have you gathered, the signs and trends, and what is triggering this big wave of retail investors coming to the market, first-time investors?
See, to understand this trend, you have to understand India's big population is lying in tier 3. Almost 68% of the population is in tier 3. They did not have a good access to our stock market. And this youth is the one who is more educated than his previous generation. And he is more connected and is very comfortable using digital platform, mobile app for all his needs. So what difference we are seeing is that this tier 3 population, who is quite young, having access to this market and having information about equity market, is very comfortable getting to the market and buying stocks and keeping his first saving and investment into equity rather than first preferring risk-free asset like bank deposit. One, because previous generation used to get around 9 to 10%. Now this generation gets just hardly 5 to 5.5%. Where potential corporate earning, growth in corporate earning appears to be almost like double digit. So I think this youth understands that there is a lots of value in this asset. It may be volatile, but there are ways to mitigate that volatility.
So would you say that the kind of observation in the market is that when retail starts rushing to the market peaks out? This time it's different, you would say? This is not the same retail which used to be. This is much more tech savvy, much more aware of financial world. And this is not a sign of market peaking out as some of the old timers believe.
No, I don't believe that we have come to that stage where actually we can say that because of retail has peaked. It has not peaked. I would say we were under-penetrated market in equity. Now, because of this digitization and control on inflation, people who were not participating have started participating. Now, if you look at tier 1, tier 2, they have not gone to that heights of participation. So what previously we used to refer was from that same pocket. From same pocket, I don't see activity has increased multifold. One reason because mid-cap and small cap did not perform. So I would say yet we have to see that peak or that euphoria that we are talking about.
Dinesh, over the last 1.5 decades, you consciously took some of the decisions to build the company, trends ahead of the time. You spent money, efforts on digitization ahead of the time, not when when push came to shove, but you were reading the tea leaves earlier. Tell us, what are the signs you saw that you built the company with a digital backbone and now you're reaping the benefits?
As I said, that this main thought came when actually this current government launched Digital India movement. And we saw it is very easy for a customer to onboard through mobile app. And big population, we were always struggling. When we were opening branch offices, we were struggling to make a viable model in this tier 3, where 68% of our population lives. And when we launched our mobile app in 11, that time smartphone and penetration was very weak. And in 15-16, what we saw 4G, Jio announced 4G, which was fast and cheap data package, which helped smartphone penetration. So what we saw by 16-17, that digital millennials are growing at a faster rate than traditional trader and investor. And we always wanted to be into that high growth segment of this market. So by 18-19, we decided why not really make ourselves fully digital. We spent huge on getting lots of technology talent, build lots of digital assets so that we can delight this tier 3. Because tier 3 people, we cannot go them and have one-on-one kind of like interaction and create education about equity. We do everything on digital platform, social media. So we saw a big growth in this segment, which is mobile first generation. That is where we took a call. Let us be into a segment which is high growth.
So their experience on using the mobile and trading on mobile has been a positive one. Are you seeing more eagerness, more comfort they find to really go about handling this app nicely? Are you seeing high growth from here on also?
See, there are two things. One, because of a young age, they are able to understand and adapt to things very fast. And plus, Google and Amazons of the world have trained them how to use mobile app. And we have lots of learning in terms of where they find easy to use their mobile features. And we have built our app in such a way that it becomes very simple for them to onboard, to understand market and do their first trade and keep their investment and keep tracking their portfolio.
Sure.
It's a combination of both that we put lots of features. At the same time, user will also used to lots of features because of he's getting used to this digital environment.
So what is the average age of your user now, and what's the average portfolio size? How has you compared it to the last few years?
Yeah, our average age has dropped from say around 37 years to around now 30s. And plus portfolio, I think ticket size is low. And that is the beauty of India. You would acquire a customer now whose AUM may be lower, but looking at his age and looking at what kind of wealth he's going to create, these are the people who are going to create wealth. Because previous generation was busy in handling their kids, their real estate, their parents. This generation is like both partners will be earning. Almost they have taken care of real estate because parents were having just one kid or two kids. So I think this is a generation which I'm very positive. They will be wealth creators. So looking at them, we are just trying to see that how we can be in that journey from their first salary, what they get, till that time they retire.
So catch them and see them grow, catch them young and see them grow is the model. Dinesh, one last word. Some marquee investors have really put in, as the anchor book is concerned, just last evening, you'll be a listed company shortly. I would not ask you any immediate near-term forward-looking statements, but leave us with a thought. Where would you like to take the company over 5-10 years from here on? We've seen your amazing journey for the last 10 years. And now it's at a cusp of being a listed company. We'll be interacting with you every quarter. We'll be grilling you. But what's the broad vision for next 5, 7, 10 years, longer term?
Yeah, we have got good anchor investors. I'm happy for that. And our aim is to become a leader in digital space. We were always a tech-savvy broker, but now we have to think more on digital side. So our aim is to build a very kind of an intuitive AI/ML-led journeys where we are able to help customer on their own to build their portfolio, track their portfolio. So our aim is to not to just become like number one digital stock broking house, but aim is to give a best service to customer, because we have known this user since 3 decades now. And our aim would be that how to capture this emotion. For us, customer is not just a code. Behind a code, there's a human, there's a need. So digitally, we would like to know their needs, fulfill their needs, and be leader in this market, which is loved by customers.
Right. All right, Dinesh, I'll let you go on that one. Thank you so much for chatting with us today. Great to have this chat and look forward to seeing you on ET now more often from here on. Great to be with you today. Thank you so much.
Thank you for giving me this opportunity.